The income statement, paragon of capitalism, business, and Western civilization as we know it. If you get that thing audited, you've got yourself some cool bragging rights too. Except for that Enron thing, which we're not going to talk about. But that brings up a key question. Given how complex income statements have become in recent years, is there a better way to consume that information? Do CFOs and controllers have to continue reading PowerPoints with eagle-eye precision to make sure that they can catch every material change? Or can we present financial data in better, more intuitive ways? Welcome to Adventures in Data and Finance, the channel dedicated to helping you leverage technology in accounting and business to work smarter, not harder. Before we start today, be sure to like, share, and subscribe so that you can be sure to get the latest fintech tutorials and strategies as they drop. And now, on with the show! So here's a question. If we're going to remake an income statement, we're going to need data. What kind of Mickey Mouse organization is there out there that has books that will have an interesting story? You know, full of things like entertainment, sports, maybe even a boat or two thrown in as well. Okay, yeah, we're doing a video on Disney today. That's what I was going for. The good news for us, though, is that Disney makes it easy to find their quarterly reports on their website, and also breaks out the P&L according to the different divisions. For those not familiar with the Walt Disney Company, their main lines of business are direct-to-consumer, content sales and licensing, sports, and parks and experiences. Yeah. So, today's data is going to be taken from Disney's first quarter results, which came out earlier this year. Before we get into the fun stuff though, let's talk about the traditional income statement first. As you can see on the screen, a general format statement includes your sales at the top, followed by the cost of buying or making those sales, also known as cost of goods sold, or COGS. From there, we can get a breakdown of all the expenses, moving through a list of items with generally declining importance on the statement. This format isn't bad, especially when you're looking for raw data, or considering that this thing was invented before the dawn of the modern PC. However, if you ask the average person to look at an income statement and point out the biggest changes during the quarter, or highlight the area of most importance for a discussion, it's not exactly the most intuitive format. And there's the rub. There's still a lot of unanswered questions that we need to drill into that's behind the data, and it usually requires exploring the commentary of financial statements to get a better understanding of it. And that's where we can bring in tools like Tableau, which we'll be using for today's video, to help our audience understand their data better and get more intuitive insights out of it. For the sake of this video, I'm going to preload the data into a usable, normalized format in Excel with the layout that you see here. We'll load it into Tableau, and we're ready to go. Now let's look at what today's finished product looks like. We've got two tree map visualizations for revenue and expenses respectively near the top of our dashboard. This is different from what we normally see in a P&L analysis, but in a good way. Let's also talk about the tree map. A tree map visualization partitions one or more qualitative attributes, like Disney's business lines in our case, according to the size of a specific measure, like Q1 revenue. Instead of having to process the magnitude difference between parks and experiences revenue from the consumer or sports divisions, we can see that Disney earned most of its revenue out of any division, over a quarter of the total company revenue, in fact, from parks and experiences alone. By contrast, if we put this up from the Disney report, you wouldn't automatically see the 25% conclusion in the traditional income statement. This flexibility makes tree maps really handy when you're trying to convey a lot of information within a very small amount of real estate, as we can see on the screen here. Oh, and did I mention that you can also sneak a bit of commentary into them anyway? We'll get back to that in future videos. The most amazing thing about tree maps, though, is that they're extremely easy to build with Tableau. Starting with a blank canvas, we're going to first filter our account for revenue, since that's the sheet we'll work on first. Next, we'll need to set up the conditions for a tree map to bloom. If you click on the Show Me menu in the top right of the screen, you'll see that Tableau has a number of built-in visuals that it supports without any coding. If you're a tech wizard, don't overlook these options since they can pack a punch. If we hover over tree map, we're told that we need to use one or more dimensions and one or two measures. So, what's a dimension? The best way to think of a dimension is that it's an attribute, which means that it's something which has values that don't have any relation with any other record. Disney's sports division will always be sports in the data, regardless of what happens to the consumer division, and vice versa, unless they sell off ESPN and ruin the illustration. Measures, on the other hand, have a built-in relationship. Tuesday is always 2 days ahead of Thursday, and 7 is always bigger than 6. In this way, we can use measures to quantify data, unlike dimensions, which just qualifies the data. The distinction between blue dimensions and green measures is a huge advantage for managing data in Tableau versus using spreadsheets. Knowing then that we need at least a dimension, let's drop segment into the pane, and then we add current value in for good measure. On the Show Me menu, we'll see that the tree map is lit up now, so let's click on it and see what happens. As you can see, things are starting to look familiar. Next, we're going to take another current value pill and assign it to the label mark as shown here. Marks act like your pivot table partitions in Excel and can allow for
multi-level dimensional analysis.
multi-level dimensional analysis in your report. One last touch is to replace current value with year-over-year revenue in the color mark by dragging it over top the existing color pill. We'll adjust the colors to green-red scale so that it's more familiar to the accounting world, and allows us to skip adding the color legend, and voila, a revenue tree map which tells you the story behind the revenue. Hey, are you tired of spending endless nights and weekends struggling with never-ending Excel if formulas? Don't you wish you have an extra pair of hands to help all your month-end problems go away fast? Does your dog, Mr. Sparks, miss going on long walks with you because you're under investigation for destroying company property? Well, good news, my friend. Palmetto Maple is here to help, and they've got just the right expertise to help your business needs. Whether you're a large enterprise or a small shop, Palmetto Maple has an experienced team of experts who specialize in both accounting and analytics for your most important projects. You know, like making squiggly graphs of cash receipts in Tableau just for the fun of it. They can help improve your processes so that you're not the one getting called in at 5 a.m. on Saturday morning. That's right, Palmetto Maple can be the extra hand you need to get your business and accounting data back on track and let you spend more time playing fetch in the park. Click the link below to set up a free consultation today, then go check on your dog, because he's probably tearing up the couch again. Okay, back to the show. Well, now we're halfway done, right? Not exactly. Since we've got the revenue tree map set up, Tableau takes a play from Excel and allows us to duplicate sheets. So why don't we go ahead and do that? Now that we have a second sheet, all we have to do for expenses is update the account filter that we spoke about at the start of the tutorial, and we'll have a shiny new expense tree map that matches what we did with revenues. Rome wasn't built in a day, and we've still got more features to put into this baby, so we're going to close things out for today. Before we go though, let's talk about the dashboard for a minute. So what did we learn about Disney from today's tree maps? Well, first, you'll notice that being number one in expenses doesn't make you number one in revenue. That's one of the immediate benefits for having two tree maps side by side. In Disney's case, they're clearly getting more bang for their buck, or ROI as accountants like to put it, in their parks division. Another thing that should be highlighted, though, is that Disney, which has had some turbulent times in the stock market recently, is seeing revenue growth from their top three divisions, which is only partially offset by expense growth in the parks and sports divisions. If I was an analyst reviewing Disney, I'd be curious about what's going on with the content sales and licensing area, since their revenue and expenses are both dropping at the same time, indicating that a shift may be in play. Thank you for joining us today. We'll be back soon with another video to continue reimagining the income statement, so make sure to subscribe so that you'll be notified when part 2 comes out.